Hey guys, Mike here. So I'm going to do a little different video today, and I would like to start doing this at least once a month, depending on your feedback, of course. And what happens is there's a bunch of reports and data that comes out usually between the 22nd and 28th of the month. And so instead of doing a bunch of different videos, I thought, well, why not just put them all in one so you get a great snapshot, of what's going on, which kind of shows you, where the economy or the market's heading and probably why it's heading that way. Or where it might be heading. And so, I'm going to put what I have in here now. Let me know in your feedback in the comments if you got reports out there, or data you think that would absolutely be important to put in a video like this. Also to include in the snapshot, I welcome it. Love the feedback. Try to put a source on there if you got it. I would greatly appreciate it. And if you guys even like a video like this, and if you don't, I just won't make it every month. So before I do get into that, I do want to say, don't forget Nike reports earnings. By the time you're watching this, the earnings are already out. The earnings call, I think, is at 5. But it's the forward guidance we need to be interested in, because Nike, their shoes aren't cheap, okay? I mean, at all. But they're a global brand. Everybody knows them. They sell everything, apparel, shoes, you name it. They're all in everything. And so the question is, I want to listen to, obviously, consumer demand. Is the demand still there? Are people willing to pay, because basically you're paying for the swish, right? I mean, that's what you're paying for. And so are people still doing that? Obviously they sell in China as well. How is that market going? And so, that's something to listen to. And the stock's been absolutely hammered down, but it usually does pop after earnings. So I just want to hear that part. And I'll try to give you the feedback or something if I get it, but that's something to watch out for, because we are back into some earnings season now. So, and there's a few more this week as well. And so anyway, the first thing I want to get into is, I think the most important part is, how's the consumer doing? And I mean, we're not doing so good, right? I mean, you got the Michigan report came out. Consumer sentiment is in the toilet again. It's down to 50. Every time you don't think it can go any lower, it continues to go lower. And it's the obvious culprit. I mean, it's inflation. We're paying a lot at the pumps, paying a lot in the grocery stores. People aren't happy about that, right? And then you go over here to the AAII sentiment, again, in the toilet. And we're down to levels, we haven't been since the financial crisis in '08. That's where we're at. We popped back up. We came back down. I mean, it's amazing to see this. And when you see a bunch of these, you're going to see that people feel like it's like the '08 crisis or something, you would think, right? And I don't think we're anywhere near in that bad a situation. It just feels like it. And, to make it even more clear, you can see this goes from 6/1 to 6/22 of this month. And this is where, where do you think the stock market will be in the next 6 months? Well, you can see a lot of people don't think it's going to be doing very good in 6 months. I mean, the bullish part has gone from 32% to 18% in a matter of 3 weeks. The neutral part has decreased, and you see the bullish part is almost doubled at this point in time. And this is important because it can absolutely give us a snapshot of how consumers' behaviors are going to change. Their spending habits, their investment habits. I think you've already seen that, right? A lot of people, I think people talk to say, I got cash on the sidelines. Or they're like, I'm not buying this. I'm going to wait, whatever. And wasn't going on vacation, but now we're going to hold off, that kind of stuff. And so, this is just saying what we feel, what consumers are feeling right now, how they're looking at this. And the other reason why you see it so down, not just because of inflation, because people have just lost faith and confidence in the Fed, the government, to even handle this, okay? And, I'm actually going to send out like a real short 2-minute video or something for you guys to watch. I found, and it's one of those things, somebody just did some editing, and it shows from 2020 to now the change in inflation and where the inflation is. And it's very easy to watch, but it's fascinating to watch. And if you're like me, you'll sit there and shake your head and go, at what point in time did the Fed, actually realize this was a problem? I think everybody else knew it was a problem, but yeah, it's amazing. I'll send it out to you. But that's what's getting everybody down, right? And getting everybody very cautious. And, a lot of people are dipping in their savings right now. So that's the first part, right? So how the consumers doing. The second part is really what drives the market, right? It's earnings, okay? What drives earnings? The economy, right? The consumers. And this is what everybody's waiting on, right? What we talked about. And you can see we're not in the negative. We're nowhere close to the negative after Q1. And you can see this was 2020. Obviously, earnings went down. You can see back there in 2018, though, you didn't have it. Never even went negative, even though the market was down over, around 20%. 2015, the market never even got down to 20%, went negative. 2011, the S&P went below 20%, never got in the negative. But then, of course, the financial crisis, absolutely, earnings were horrible. or revenues, I should say. And then, of course, we go back to '01. Obviously, you see the same thing. I mean, during massive crashes like that and recessions, yes, revenues and earnings are going into the negative, but we're not even there yet. And that's what people are just waiting to see in July. And don't forget to hit that like and subscribe button, guys, if you get something out of this. And so there has been some, negative revisions put on earnings, but not that many, because analysts are different now than they used to be. They really weight heavily on what the company's guidance says, really. And so I don't see that happening. Like, a lot of people think these guidance should be coming way down, and you just haven't from the analyst. And so we'll see. That's why this earnings coming up in July is going to be huge, because it could shock everybody. You could just have companies, because they guided down already, right, in the first half of the year, all of a sudden come out and say, oh no, we're good, we're going to hold our guidance for the rest of the year, and actually beat earnings or something. And it would just like, oh, okay, really? And boom, what's going to happen? I mean, it's crazy things happen, or they could do what a lot of people think they're going to do and start missing and guiding down again. And so, we just got to wait and see. But it's an important earnings season coming up. And this is what a lot of people are kind of waiting on those sidelines for, the big investments to see, what is the E going to be, right? And, the other one we talked about, as we'll get into, the E. And our big one here, and this is all about the E, the earnings part, right? P/E ratios, the S&P. And you can see, that's where we're at right now as of June 24th. But if we sit here and draw a line over, you can also see this is on the daily. And obviously we can go lower. 2020 was lower, 2018 was lower, and so, but it's either going to be difference between the percentage drop or where we get to. I mean, are we supposed to be getting way down there between 10 and 12? Most of the time they'll end around between like 13.5 to 14.5. Again, we're around 16 now. We dropped to 15, but with this rally and things like that, we actually gone up. So that's where we're at on that. And a lot of people are looking at this. I personally don't think it means we have to get to a certain number, but if the markets are looking for that, then that's what they're looking for. And there's nothing else you can do about that. And one thing that's really important is to understand that's large caps. Look what's going on with mid caps and small caps here, guys. Mid caps are sitting here. They're already down close to where 2020 was. The only thing lower than this was '08, right, from where they're at now. So they've been smashed way down. And then if you look at small caps, even worse. Look at small caps. They're already down to a level as of June 24th that actually eclipses, it looks like it eclipses 2020, and it's right there, so close to where '08 was. Look at that. I mean, I don't think anybody expects small cap to be that bad off or to be held down as long as they've been getting held down, and could go further. That's the scary part about the small caps. If the market continues to sell down, most likely they will go down as well. And the reason why I think this is one of the most important ones is to understand what is being beat down the most, because that's normally what those companies that just got thrown out of the bathwater and got lumped in with all the other small caps or mid caps and didn't deserve to be. They're usually the ones that's going to turn first, well before the market does. And to show you what I'm talking about, you can see this is Amazon back in '08. Look when Amazon bottomed. It bottomed in November of 2008. Look when the indexes, the S&P and the NASDAQ bottomed though. They bottomed 5 months later in March. So it was already way ahead of the indexes. And there's a dozen other examples out there I could show you just like that, that's going to turn. And you won't even know they're turning. If you don't own them, most likely you're not even going to know they're turning anyway. And so, but that's how it's going to happen. They're going to start moving up, passing their 50-day moving average, 100-day moving averages, and those percentages of stocks in the S&P and the NASDAQ above their, whatever moving average it is, will start to increase before those indexes finally bottom out and start to turn up. And so, of course, the big thing is what makes stocks move up more than anything. It's in this market especially, there's a lot of things. But one is margin debt as of May. Again, it's the lagging indicator, still going down, as you can see. I mean, there was a lot of margin being used in 2020, 2021, wasn't there? Everybody was getting it. But as you can see, I mean, there is no meaningful, and you see the big drawdowns right there as well during the last, market crashes, really. But, there is no real turn up or turning back into a bull market like that until people start taking on a lot of leverage, right? A lot of margin accounts start getting used again. And this will definitely be lagging because right now, as far as what I read, there's a ton of cash on the sidelines. So that will be used up first. But again, to move, I'm talking about double digits up on these indexes and stocks. I mean, you're going to have to see this start to turn up And there's always these head fakes, as you can see right there. You've seen it multiple times where it'll come up, nope, draw back down. Stock market continues to sell off. And then we finally head up for these big rallies. And if we look at it as a percentage, I mean, you can see obviously still big drop down. We've had, in percentage-wise, much bigger drops than this. So, I mean, we continue to see this go down depending on which direction the market actually goes, or depending on if the macro data changes at all. And so, yeah, that one's a lagging indicator, and the market would have already started to move up when you see it, but at least that's kind of the confirmation to say, oh, people are taking on risk again, right? Because people don't go into margin unless they're willing to take on risk, okay? And with all the cash sitting on the sidelines right now, I don't know what to see, how long that takes. You can see how far it can fall, but when you see margin debt, in those last like 01, 08 drop, that's because of that final capitulation where the market's just tanked. We haven't even got that if we're going to get it. Nobody knows if we're going to get it, right? And so that's the reason why you had those big drops percentage-wise in the dot-com and the financial crisis of 08. And so that's just something everybody's kind of sitting back waiting. They think it's going to happen. It might happen. Nobody knows. And if anybody tells you they know, I mean, it's ridiculous. They're literally just guessing. I mean, the data says, yeah, probably so, but we just don't know, okay? And so let's be very clear about that. And I'll clear up something because somebody asked me in the comments on yesterday's video when I was talking about the stages and stuff. And it's just one of those things, look, short term, you know, what does the charts look like? What's things saying for a rally? It's saying they can rally. Even some of the biggest bears are coming out saying, yeah, we could rally into end of June going to 4th of July, which is usually a positive for the market and stuff. But long term, no. I mean, until we start to see macro data actually changing, earnings are looking great, you know, the Fed's pivoting, saying, no, we're not going to keep tightening and rolling off our balance sheet, things like that. I mean, I don't know how anybody could be long-term bullish right now. I mean, you can be if you want to, but I just don't see the data that shows that. Short-term, these rallies, yeah, absolutely. But the market could rally for 2 or 3 months. I mean, that's common, right? I've showed you the charts. That's common. And so, but we'll just have to see. You know, we have to see where the data leads us. And, you know, I'll show you something in a video I'm working right now that happened in 2018. It's mind-boggling. And again, that's why nobody, I mean nobody, can spot the bottom. Nobody knows, right? And I'll show you exactly what I'm talking about. The best example I found when I researched of what happened in 2018 and when that crash, or it got around 20%, hit the bottom and took off. And nobody saw it coming. So anyway, I'll put that out there to you. Hope you got something out of it. Hit the like, subscribe button if you did. Share the video. I really appreciate it. And I'll see you guys later. And if you got anything you want me to add to a video like this, or you want to see a video like this every month, please put it in the comments and give me your feedback. Thank you very much.